Manufacturing can't seem to make any progress. And what we're going to show you, the number one reason, well, it's inflation. The Empire Manufacturing Index was released earlier today. It is above zero. That is good. Released at a level of 6.0 following the prior number of negative 13. That's good. But what we're going to show you in just a second is 6 is not a great number. It's just barely above zero. Inflationary pressures and employment under pressure, those are the two key themes we're seeing in this month's reports. For example, we see prices paid, that's that big yellow bar. Prices received, that's the red bar. Prices paid, think of wholesale prices, think of the PPI report yesterday. They're a lot higher than what the manufacturers can receive for those goods. Also, we have the average work week and number of employees. Those are two categories in negative territory. The employment sector of manufacturing really seems to be taking the brunt of this. Now, prices paid, like we said, is greater than prices received. In blue, prices paid. In red, prices received. And what we're seeing here is the same dynamic as we saw the other day with a PPI greater than the CPI. The producer prices, the wholesale prices, are higher than what they can charge to the consumer. And as a result, profit margins are being squeezed. Now, at the same time, the employment market is subdued. We see here -1 on the average work week. Number of employees, that's a -4. And both of these actually have been in negative territory for the better part of the past year, even more so. Orders do look good. Inside the manufacturing sector, there are some signs of strength, such as new orders and unfilled orders. They are positive. Also, there is efficiency, and it is improving. Delivery time and shipments, they're both up. That's a good sign. The Empire State, that's in blue. In red, the Philly Fed. We're going to get the Philly Fed in another couple days. Now, over the past year or so, the Philly Fed has been stronger than the Empire State Manufacturing Index. Last month's Philly Fed number was great. It was a 44. It'll be very interesting to see over the next couple days if it's able to follow through. Interest rates, they're just too high for the manufacturing sector, and that really is the truth. We can see here in blue, and this chart goes back to 2006. That's the Empire State Manufacturing Index. That's the general business activity. In yellow, that's the 10-year U.S. Treasury bond, the yield. But think of the yield in this case in terms of the expectation of inflation. Currently, we have a very high yield, around 4.5%. That means there's an expectation of high inflation to come. So let's take a look back in time to see how the two sort of corresponded with each other. In 2006, 2007, the economy was very strong. The Empire State Manufacturing Index, the general business conditions, that was at 25. That's a good number. The 10-year U.S. Treasury bond was at 5%. That's also a high number, but it's a strong economy. It could support those high rates. Then we had the downturn in '08. Empire dropped down to -35. The 10-year U.S. Treasury yield dropped down to 2%. That was expected. Then we had the recovery. The Empire went back up to 26. The 10-year bond was only 3%. So the manufacturing sector was strong and it was able to digest and handle a 3% Treasury bond. That's not that bad. More recently, 2022, 23, the Empire was at 30. The 10-year bond was at 175. We basically want to see the Empire Manufacturing Index as high as possible compared to the 10-year bond. Keep that in mind. Right now, the Empire State Manufacturing Index is only at 5, and the 10-year U.S. Treasury bond is at 4.5%. A lot of analysts think we're going to go to 5%. So, point being, and the real takeaway from this is that yields are so high, and in turn, the expectation of inflation is so high that the empire just can't seem to get out of its own way. It's only registering a 5. The manufacturing sector, we could say it's strong, but it's not strong enough to swallow this 4.5% 10-year bond. It's just too much. Taking a look at the economic calendar this week, on Wednesday, housing starts, building permits. Thursday, we have that big Philly Fed number. We'll see another 44, maybe better. And then on Friday, existing home sales and consumer sentiment, of course, too. We hope this has been helpful. We look forward to seeing you back soon.